recording to make sure that you're going to have access to this webcast. Hi, again, my name is Sergey Savastyuk, and I have PhD in applied mathematics. I did a few successful startups here in the Silicon Valley, and now I started Tickeron because I've been trading for quite some time and creating my own algorithms. So today's topic is how to make money with patterns. It is quite interesting because, as you can see, our engine is built on artificial intelligence together with natural language generation technology. So what is the mission of our company? Is to really provide you a clear and specific advice. Why we can do it? Because we SEC registered. SEC is the Security Exchange Commission. And there are different companies which give online different kinds of classes and advice. And they might run into the situation when they can claim more than they are supposed to. For instance, they can guarantee some of the results, okay? So to tell you what might happen with this type of companies is that they can be sued. So as you can see, Federal Trade Commission sues Online Trading Academy for running an investment training scheme. And it is as old as February 12th of 2020. And as you can see, they charge $50,000 per training course per person, okay? And why they were successful of taking that amount of money? Because they claim something which they cannot claim, which was the guaranteed result. In trading, there is no guaranteed result, and that's where SEC registration matters a lot. If you're gonna take somewhere other classes or kind of run another website, check it out if they are SEC registered. There are very few of them, okay? So how to check it? You can go to the internet and you will find the company, let's say like Betterment, okay? Maybe you've heard the Betterment for the passive investors, and then you can look for the form ADV part 2, okay? So if you look and find that form on the website, then it is SEC registered. If not, then it is not, okay? As simple as that, okay? So that's important introduction about our company. That means you're not going to get any BS from our company, and there's not going to be any unverified claim. So here is the question: why to use AI algorithms? Because already 75% of global trade is handled by algorithms. Okay, so if you don't use algorithms, you are in a great disadvantage. And if you use, you might get some edge. But here is the next problem. If you compare yourself as individual investors, then here's the thing, that when you have, let's say, baseball league, minor league, and then you can play in minor league and baseball, you can play in college, but then you might get, if you get lucky, to the national league. And as you understand that the person from minor league cannot play in the national league. The problem with the investing is that you immediately play in the national league against the hedge funds, mutual funds, serious professional investors, and that way you really having a problem, because hedge funds have staff mathematicians, hundreds or maybe thousands of computers. They do a lot of their own software backtesting, and they're well prepared with algorithms. Individual investors like you, like me, okay, typically have a little bit of a math knowledge, one or two computers, You can subscribe to some software or some services, and that's about how much you have. And so what to do? You can come to us. You can come to Tickeron, which has also thousands of computers. It builds AI. It is SEC registered. And then you can get a pretty much clear advice with their specific concept, which is odds of success. Okay, I will talk about that more, and I will tell you what it means. Okay. So what I'm gonna do, I'm gonna go through some basics. Some of them, some of you might know this stuff, some of not, but because I'm gonna use some type of terminology, I'm going to tell you that, okay? But at the same time, the prerequisites, really, you have to know what are the stocks, what are the ETFs, and then you know that the stocks and ETFs and other asset classes move up and down, right? I assume that you know that, okay? Okay, here's the thing, that in order to start trading, you have to really think of what would be your trading plan. And then what I did, I simplified that for you, okay? So if you're really thinking to buy, or you get some signals to buy, that typically the story goes like that. You can find the stock was moving up, and you are betting that the stock is going to continue. So that means trend is going to continue up or down, right? So you can also buy on the dip. So that means stock was moving up, then kind of dipped a little bit, and now you bet it's going to move up. Okay? And the opposite is here. Okay? So there are some trading plans when you wait for the breakout. Okay, when I'm going to be talking about the patterns, you will see that you have to wait for breakout, and then you're going to see why it's going to continue up, or after breakout, you're going to see why it's going to continue down. Okay, and there are some trend reversals, which are kind of most difficult part to find and to prove it works. Okay, so let's assume now market up or down, and you don't know what to do, but you know that your plan is to find, for instance, continuation of the trend or deep, and then you're already better off. Okay, so another important terminology for our website, if you're going to use, you're going to find this stuff related to the so-called odds of trading success. Okay, it's pretty much statistic like in a baseball. What do you do? Let's assume you selected the way of the trading on the dip. Okay, so you're right here at this point. So that means stock went up, then down, and you think, okay, is that going to go up? Okay. So what our AI, our artificial intelligence algorithms do, they find similar situations, similar cases, similar scenarios for this particular stock, for these particular shapes, and I will talk about the shapes as patterns, okay? And then look back, okay, 1, 2, or whatever months, similar cases happened, okay? Then, what you see that the algorithms find the similar cases and then counts. Okay, if it was this case, went up, it's success. Went down, it is a failure. Went up, success, success. And then out of 4, you have 3 successes, 1 failure. So that means 3/4 is 75% odds of success. Okay. Obviously, it does not guarantee that right here is going to go up, but you know from historical perspective, for this particular shape, it worked out well in 3 cases out of 4. Okay? And that's the important terminology you have to know, because if somebody tells you guaranteed results, 100%, never believe, run away. Okay, let's move on. Okay, and here is also interesting story when you look at the group of the, I don't know, ships, right, or stocks. If you make a noise from the left of this herd, then it's going to move to the right, and the opposite. It turns out the same is true for the groups of stocks which are related. It could be in the category or the theme. Okay, so I will show you some of our proprietary way of the checking what's going on. Okay, so let me show you what you're gonna see like before login on our website. Okay, that's what you see. So what you see is the news feed, which is in fact is somewhat news which we generate, and in most cases it's signals. Okay. Um, then there is a window where you can find trade ideas, or you can look and read what's going on, and then you can create your news feed. So, for instance, let's see. Equinix, it is the company where these insiders sold legally, as you can see, amount of stocks equal to 5.5 million. Okay, that's the information you can find in our newsfeed. You can scroll and see, okay, Procter and Gamble, other people, CEO, COO, CFO sold with amount 3.1 million of stocks. Okay, so let's assume you kind of like the information related to insider trading. You can click here on the hashtag insider trading, and now you have a news feed out of the insider trading only. Okay, so that's the real benefit of reading our website. So go back here, and as you can see, there are hashtags pretty much on every single news we generate, and they have technical analysis, artificial intelligence, price, volume, earnings. So let's assume you're interested in earnings. You click here, and you get the news related to the earnings. Okay, so now it's earnings when March 6th. So we report earnings expectations the day before and I think a week before. Okay, so you can look at this. So there are different ways of to use our news feed and then get some benefits. Okay, but I started talking about the hertz, right? So what you can do is as follows. Let's assume this is a current status of the market. So this is DIA, SPY, QQQ. It is the ETFs, electronically traded funds for Dow Jones, S&P 500. And you really want to see what is going to happen with the market in the future and what our system thinks about this particular crowd, a particular herd, right? So you can click here or right here just to enter, let's say, DIA. Okay. Then you can enter here SPY. Okay. So QQQ, it is for the NASDAQ 100. Okay. And then one more IWM. Okay. And that's kind of major ETFs which characterize the market. And then the trick is, like for instance, I can click here summaries and I press go. Okay. And let's see what kind of information we can generate. Okay. So you see summary analysis of this group, these particular ETFs, and this group moves how? Okay, with the chances of 80%, it's going to continue down. Why? Because the ratio advancing volume versus declining volume is 1 to 1.8. What it means? It means that people who are buying is kind of 1, and people who are selling is almost 2. So that means the number of sellers twice as higher than the number of buyers. So that means market is still in somewhat in a bearish territory. Okay. Now you can read about each particular ETF and then see what are the predictions. You can see the sign is down, SPY down, QQQ is down, and IWM also down, okay? What it means the situation doesn't look good with this thing coronavirus, and then we still have to be careful, okay? So let's go back. And then let's do like that. Let's refresh it, okay? And then let's say, okay, I'm kind of interested with this theme of coronavirus. What's going to happen with another group of stocks? And let's say, okay, how about casinos? Okay, I'm typing here category casinos or gaming. Okay, click here. And I can go either to screener, and that's actually a topic of another webcast. Maybe in a week or two, you can come. I will explain how to use our screener. And I'm going to go this time to our summary again, and let's see what's going on with the casinos and gaming, okay? So as you can see, I here have 21 tickers, okay? This is a group of tickers, and this is a description of this. And as you can see that our proprietary group analysis graph shows that it's gonna continue to go down with about 4% down expectations. And now look what happened and what kind of a news we generated some time ago, okay? And if you look at this yellow dot, that's when the signal was generated. You can see that February 26 for this company, TRWH, it is Twin River Worldwide Holdings. It's all of them casinos, right, or gaming industry. The call was made that it is going to be bearish, negative, down on 26. Okay, today is what, 5th. It's quite a few days ago. You could have made money right from this point. Okay, let's look at another one. February 25th. It's not a good picture, but let's look at that one. This is also somewhere here, end of February. Okay, February 20th, it is Las Vegas. Okay, Las Vegas Sands and Resorts. From February 20th, look, from that point, that was a prediction made to go down. Okay, and what would be interesting that you could have received that information when you would have access to our website during those days. Okay, and then you will continue to scroll, and as you can see, there were precisely points indicating going down. And you can say, oh, okay, I'm saying words precisely going down. But that's not true. Why? Because look, here's a join for free. Obviously, you're already part of the Tickeron when you subscribed to this webcast. But if you want to see the odds of success, you see the odds of continued downtrends are, okay, you click here, you through the Facebook, I'm using this one, okay, and I'm getting to the same exact point. And now we are opening up all of these odds of success, right? As you can see, 77% chances going down, 76. And what is important, this is not from the point of the February 20th. Our AI recalculated the odds of going down from today. Okay, this is important that it is not from February 20th odds of 58. What we did, we received the signal of moving averages. And by the way, if you don't know anything about moving averages, you click right here, and then you can read about moving averages, how it works, okay? Right here, okay? Let me see that, okay. Let's assume you have no idea what is a momentum indicator is. What you do, you click right here, you read about momentum indicator, and then you see the odds of going down is still 75%, okay? So that means this 75 not from February 25th, it's from today. So what it means the casinos continue to go down. So what I'm saying is that the difference between those who claim it's going to continue down, we claim it's going to continue down, but we give you the chances. Sometimes chances are high, sometimes chances are low. And what we do, we provide you the honest analysis, okay? Where was Las Vegas? Okay, here's Las Vegas. Okay, let's read more. You click here, read more. As you can see that there is some bullish outlook. Also, there is something might go up because some Bollinger Bands is going to show some up, but it's still our indication is going to go down. Then there is a fundamental analysis, which is our proprietary stuff, which shows how well it is positioned in the industry. Okay. Okay. So this is just without any money, you can get this analysis because it is for free. Here are some our premium services where you can get these patterns. This is also patterns, but they're intraday. I will show about them too. This is a trend predictions. When you want to trade on the trends, then you can access to the trend prediction engine. Okay. When you're talking about the patterns, typically it is about trading through the breakouts, okay? And I will show you how it works. Let's go back to this. I covered the group analysis and I showed you the casino is going to go down, all of them going to go down, and we confirm the entire group is going to go down. Okay, let's talk about the pattern. Pattern is such a thing, is like similar to the doctor who is looking at the EKG, okay? When doctor looks at EKG, a doctor says, oh, okay, your valve here is somewhat malfunctions. We will have to fix it. Okay, why? Because doctor, and these days actually AI also looks at EKGs and then can recognize the problem. And it turns out that there are some patterns similar to EKG exist in the marketplace. And if you can quickly recognize them, then you can analyze them and also say the chances of success. Okay, so this one of the examples called head and shoulders. Why it's called head and shoulders? It is like one head. It's kind of reversed for the moving up. Okay, so this is one shoulder. This is head, and this is another shoulder. Okay, it turns out that if there is such a behavior discovered and it crosses this breakout, you see these points 1, 2, 3, and 4, right? Then we can calculate how far it's going to go up. Okay, so that means we calculate the entry point. You have to get to the stock right here at the breakout and get out at this point of the target price. So what we do well with our algorithms, we go to the market and find this shape. You're going to say, oh, okay, why this shape? I will say you, oh, because it might be this shape. And it's still going to be the head and shoulders. It might be this shape. It's still going to be head and shoulders. But what's going to be different? The width, the amplitude, and these distances are going to be different, and the chances or odds of success are going to be different. Okay, so what AI does, goes to the market and finds different types of patterns like that. Okay, so let's go here and let's access this pattern search engine. We click here, and now we see this page, instant search. You can click, kind of type here pretty much any ticker or company and find the patterns. But let's go through the patterns first. Okay, this is about 37 different types of patterns. Okay, where you can see this is a head and shoulder called bottom. And this is going to be head and shoulder top. It's exactly like one head, one shoulder, and one shoulder. Okay, but that's for the bearish, for stock moving down, and then bullish for stock moving up. Okay, so that all of them are different, and all of them have different statistics. Like in baseball, when you're having a player, every player has its own statistic. Okay, there are some popular and very well-known patterns like cup and handle or head and shoulder. Like for instance, some people like to trade through the channels. There are some flags. Okay, so let's look at the why we think it is somewhat a good pattern and why we're looking for them. Okay, as I said, it could be different width, different height. All stuff is different, but the methodology is somewhat the same. Okay, so let's try to, like doctors, analyze what's going on. Okay, so the stock was moving somewhere here, hits a particular kind of point, number one, and goes down. So what it means going down? It means so people really selling this stuff. Okay, and then there is a point where it reverses and goes up. When approximately the point 1 and 3, it turns out that it hits some particular level of resistance, okay? And it goes down. Again, if it's going to go continue down, there's no pattern, which is called the cap and handle. But if it goes up, then, as you can see, this is a handle, this is a cap, okay? And then if it goes through this breakout, you remember trading plan, go through breakout, that means you enter this point, and then we can calculate for particular stock and for particular pattern, how far it's going to go. So that called target price. And this one, H, is called distance to target. Okay? So we can calculate how far it's going to go and with odds of success. So that means if you see anywhere patterns without odds of success, then they claim they found something, but they never analyzed. Okay, let's look at the historical results. So when you see the patterns, okay, you're going to see pretty much the following information: the confidence level, okay, and the distance to target. Okay, and this is a statistic. So as you can see, with the confidence level about 60%, with distance to target 5%, we identified in the past about 4,000 patterns. So the success rate 65. You can say it's kind of actually good. It's not bad. But what you can do, you can say, okay, what if I'm going to trade only those patterns which have only 70% confidence level? And as you can see, the success rate to reach the target price of 5% is 73%. So that means pretty much, as I showed you, 3 out of 4 of your trades are going to reach 5%. Okay, but you can say, okay, I might not like 5%. I really want more, let's say 7%. Okay, 74%. Let's kind of raise the bar and say, okay, I want to trade only with 80%. It's 77%. You can reach 7%. But you remember the first was 4,000 patterns. Now you have to wait longer to get that type of a result. Okay. As you can see here, the real examples which were in sorted by this value, you can kind of list all of them and then see that for all these companies, we identify those patterns and put them to the statistic. Okay, so this is a real live situations, and then you're gonna now remember for the patterns a confidence level and the distance to target. Okay, now let's look at what let's say other pattern type. Okay, I talk about head and shoulder, which goes up. Okay, so here is another, like a doctor can explain to you why it happened. So you see, this is a shoulder, the stock moved down, but kind of people started buying, then move up, right? Then it's still, there are enough sellers, and then people selling, and then you see they kind of outsold this point. And then this moving up, okay? Then it gets to the same level of 0.2 and 4, okay? Well, now this high, then again started selling, but then it turns out that it didn't sell more than the point number 3. Okay, it didn't go right here, because if it would go, then it would destroy the pattern and we would throw away this case. But we're looking and waiting for the breakout. As soon as there is a breakout, we say that pattern is confirmed. Okay, and then now we know how far it's going to go. Again, no, with some odds of success, right? With some confidence. Let's look at the data, right? The same data, 3,000 patterns were identified with the confidence level 60 to reach target plus a target price about distance to target 5%. Okay. Again, if I raise that bar to 70, it's 77. And if I made 80, I have only 1,400 patterns. 81% of reaching target price with the distance 5%. I can say, okay, I want to make only 10, and it's 90% out of 520. But that's kind of over a few years. It's not recent data. But as soon as you see that, it's pretty good deal, okay? And this is the results, okay? And there is no magic about that. It's only AI, which goes to the market, finds these cases, and then presents them to you, okay? So how to find them? Let's go here, let's say advanced search. In advanced search, you can find them right away. In the daily alerts, you set it up for the future, okay? But the setup is the same, okay? When you look at these alerts, you're gonna see the same panel, and then you're gonna be receiving these patterns every day if you access daily alerts, and you're gonna be receiving emails. You see if you click here, Facebook, if you click here, and some push notifications. Okay. So I'm going to be talking about advanced search because it doesn't make sense to talk here, because we're not going to get them for the reason there is no market right now. Okay, go to the advanced search. So in order to make a good setup, you have to think, okay, what do you want? Do you want to trade penny stocks? I would not. You are not experts in Forex. You are not experts in cryptos. You might not be expert in the ETFs. Okay. So then you can say the confidence level, you want to put at least, let's say 54%. And now it is emerged patterns versus confirmed. Maybe I was not that clear on that, but I will tell you later the difference, okay? And then market now is down. I'll just exclude the bullish market, okay? As you can see, now I have a table. What I see in the table, I can sort that by confidence and the distance to target, okay? And obviously, you already got the idea. If you sort by confidence, the higher the confidence, the better the case, okay? Then let's see, okay. Let's remove the merged. I'll show you what emerged means anyway. And then here one was confirmed on the, you see, emerged versus confirmed. You might intuitively understand what it is. And then let's assume you want sort not by confidence, but the freshness, okay, confirmed. And now you have a day, today, March 5th. And the confidence is not very high, but still it's not a big deal for some cases, but it's kind of important. And the distance to target 3, okay? Let's look at the pattern itself, and I will show you what it means confirmed, what it means, okay? So as you can see, we see dead cat bounce, also somewhat famous pattern, which goes like that, kind of goes down. You remember I showed you on a dip, right? And then quite a lot of people, when they trade on a dip, they want to get to the point number 3, going down. Actually, going down, you have to understand what it means as selling short. But now market is down. I'd rather show you how it works. If you want to see and get about this site more and the details, what it means selling short, options, and other stuff, you can go to Academy, you can go to one-on-one lesson, subscribe, and then I or some other experts will be able to help you to learn more, okay? Now let's go back to this example. You remember I showed you this case where I said, okay, this one on the dip, okay, up, down, up, down, okay. So that's approximately where we are, okay. So you see it down, up, down. A lot of people trying to trade from the point number 3, which is somewhat stupid because it can continue to go up. We analyzed these patterns and then concluded that you have to wait for this breakout point when it's go below point number 2 going down, and if it is reverse, then kind of goes up, down, up. So that kind of wait, and then after that you sell short. As you can see, this is a 3% target, and that's how the real graph looks like. You see it's went down, up, down, and then it went up a little bit, but we're still waiting for the breakout. As you can see, it's breakout. What happens when we do not cross breakout point, we claim that pattern is emerged, okay? As you can see, it was emerged on 28, but confirmed only today, okay? And then it's going to continue to go down. It's still going to make like 3%, okay? What you can do on the right column, as you can see, there were only this PTR and R and paratype dead cat bounce was only one pattern, and it worked out perfectly, just one, okay? And there were no other patterns dead cat bounce for this particular stock, okay? But you can look for other statistics, whether or not this particular company is a good kind of following the patterns, whether or not it has good EKG, okay? So if you take PT and R in all types, and then now you can look at the statistic. So with the 20%, it's 44. Let's kind of raise the confidence level to, let's say, 60, okay? There were only 7 patterns with the confidence level 60, distance to target 5, and with the 71%, this pattern worked out well, okay? Let's look at the result. As you can see, this is a historical results for PT and R, where this is all results of success, this is all failure. As you can see, 23%. And if it was a failure, we call failure if we do not reach the target price. Okay, even 1 cent is not reached, we call it as a failure. But you still can make money on the failure. In this case, it was one pattern did not reach the target price, but still made 1.4%. Okay, other cases, this case 9, this 20%. Okay, average 18%. Okay. Yeah, here's on this particular pattern was not good, but still better than this one, okay? So as you can see, we analyzed, and then before entering the trade, we really know whether or not the previous story was good for us, okay? So what we can do is also see whether or not that cat bounce as a pattern is kind of really good for the stocks, because if you remember in this setup, we could have been trading cryptos, ETFs, and other things, okay? So we could have checked different statistics. So with the confidence level 20, if I raise to 60, I have a pretty good rate. So that means that cat bounce is kind of good for stocks. And if we find that, then it works, okay? So I'm already talking about 45 minutes, and what I can tell you is following, that this is a so-called end-of-day pattern. So that means we take the data at end of day, at the closing, and then analyze the patterns. If you want to day trade, so that means you kind of entering the trades during the trading sessions, okay? Then you go here. This is a similar setup where you customize your feed. Here you customize, and then you look at the different time intervals, but the philosophy is the same. You would be receiving patterns for stocks and ETFs, okay? with, let's say, 53% confidence level as a minimum, okay? For the time frames 30, 15, 1 hour, and 4 hour, you can get the 1 day or 5 minutes, depending how much time you have. And then when you see that what it means during the trading hours, this picture keeps moving, it's a feed. And that feed feeds you with this pattern. And at the same time, gives you the pattern name, flag, Facebook, it means bullish, on the time frame 15 minutes, okay? Current confidence 54, and it shows that within a few minutes you can make 2%, okay? And that was the end of session. And then, in fact, what it means, most likely, Facebook can go down, okay? And again, distance to target, emerged, confirmed, all the data here, and there's a confidence level 63%, okay? It was confirmed with this confidence, but real confidence, current confidence is here, okay? Now, to the conclusion, what you can do every time when you see this type of patterns, you can always read just about the Facebook, more about Facebook. Now, this is a page which you can access even before login. Let me kind of go in the conclusion, log out, okay? I'll show you how to do that. So what you do, this is our page, okay? So what you do here, you type either FB if you know what it is, or you type Facebook, right? Oh, okay, Facebook, okay? So you click here, and then you go to this news feed. And now you're gonna go to the news feeds dedicated primarily to the Facebook or any other company you type, okay? So what we provide you with information of what we think. This is a summary, okay? So I will believe is that, oh, okay, you see, join for free. So if you log in, you're gonna know the chances of going down. For the Facebook, it's kind of the tricky. It's 4 bullish indicators, 4 bearish indicators, and then we give analysis. And as you can see, we calculate your order of success. We found 47 MACD signals, and some of them worked out well, okay? And you cannot say, oh, I have no idea what the MACD is. You click here, and then you read about MACD, okay? That's how simple we made it for the regular folks. And our computers, thousands of computers, work every day and then pre-calculate that data, okay? And then it's a fundamental analysis, then analysis of the support and resistance, then general information, then this is a trend predictions. I told you I can cover that in the other sessions, okay? So that's about it, very brief. You can use it, subscribe it, you can get one-on-one lesson or join our other webcasts. Okay, now time for the questions. You can type them, or there is some instant messaging and I will try to answer, okay? Do you guys have the questions? Maybe sometimes it goes easy, sometimes it goes tough. I hope I did not overwhelm you. You can view that again. You can try our system. You can try the premium stuff for free for about 30 days and see if you're comfortable with that. And then if you have questions, you can come to the next webcast, okay? So if you, oh, there are some questions. Okay, let me see with the chart. Okay. Thank you, sure. Where did you go to find this pattern, the page with all patterns on it? Okay, let me show that again. So what you do, you go artificial and human intelligence, and this is a pattern search engine. Okay, that's the premium service. And now you can read about all of them. You get what, like for instance, broadening bottom, channel up, okay? And all of them is about As you can see, we describe the psychology of trading in the channel, okay, and give you statistic. But for that statistic, you really have to at least sign up, okay? So more questions. Did I answer your question that where to find it? You find all premium products here, artificial and human intelligence, and then use them, okay? So let me see, there's another question. Okay, my page is completely blank when I click that. There is nothing on it. Oops. Okay, that's kind of hard to believe because I don't use any special computers and I logged out. And as you can see, if you type tickeron.com, click here, click pattern search engine, and then you get here. I don't know. Try it again. Maybe you open too many tabs and that way your computer doesn't want to take it. But as you can see, it works for me. If you want to look at another product, trend predictions, again, click here. And now you have a trend prediction engine. If you want to, oh, actually there are videos which you can view. As you can see, these videos maybe somewhat outdated, but you can watch them too. Okay. Did it work? Hopefully yes. Yes, there's another chat. Okay, thanks. It was not working on iPad, but fine on a laptop. Okay. Actually, thank you for the feedback. We will tell our engineers that iPad was malfunctioning. Thank you for the feedback. Okay, guys. Hopefully you enjoyed this webcast. There were a lot of people here today. I took these questions, and I hope you're gonna subscribe to use it. Just enjoy. Thank you, and I will then finish this webcast. Thank you, guys. Bye.